Welcome back to Strongman Personal Finance. Good morning, everybody. My name is Christopher Belli. I'm a certified CPA accountant. I'm a fake boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. And we got to talk about Fubo. That's right. Fubo just had earnings, and apparently the stock went up. And I got to give props to Spencer Cornelia because he defends Jeremy Lefebvre, one of the most disgusting, sickening, prolific scammers on YouTube. But Spencer said that, well, there's somebody out there that potentially made money, maybe, possibly, probably not, on Jeremy's stock picks. And I guess if you bought Fubo on Friday or whenever the market was last open and you own the stock today because of Jeremy, you made some money. So maybe Spencer's right. All right, let's go ahead and check out Fubo. What happened with Fubo? Well, it's only down 79% in the last 5 years, but today it's up 6%. Good job, Jeremy, and good job, Spencer, for defending Jeremy. This is really, really a great return, and I'm sure this is very sustainable, okay? So why is Fubo up? Well, we got some interesting statistics coming out. We got year-over-year subscriber growth. And if you don't know what Fubo is, it's basically sports ball, okay? Sports ball. It's a streaming service where you can watch a bunch of sports. There's no competition there, right? Yeah, it's just Fubo by itself. The only thing in the industry, apparently. But, yeah, so you watch sports ball, and you subscribe to it. I guess you pay, what, $70, $80 a month, whatever you freaking pay for it. It's ridiculous. But, yeah, gives you sports ball. So you can see here they have pretty decent subscriber growth, 29% year-over-year subscriber growth. However, the year-over-year total average revenue per user is what I think that means, is barely up. So they're funding most of their revenue growth via subscribers, which is fine, okay? Just something to note there, that revenue per user is not really up that much. And it could be a part of, just because of the whole macro environment and ad rates being lower. It's affecting all of us YouTubers, except the ones that just chase trends for their own personal gain, like Spencer and his friends. Anyway, so the rest of the world streaming, let's see, 420. We got 420,000 subscribers and total revenue of 7.2 million. I don't even know what this means. We'll go look at the financials in a second, okay? Advertising revenue in North America. We can see that advertising revenue, even though the macro environment is so bad, is up 30%. Okay, their revenue is growing. And we can see that their global expenses as a percentage of revenue is going down. So apparently they're growing revenue and they're cutting expenses. But if you add up the numbers, see these numbers right here? You add up these numbers, you might notice something. They're more than 100. But we'll get to that in a second, okay? So here's the first thing that I don't like. Now, apparently Fubo's up like 6%, okay? Because their net loss was worse than expected. Their net loss for the fourth quarter of 2022 was only $95 million. Yeah, okay. Only a negative 30% profit margin. I guess it's better than the prior year, though. I mean, last year they had a negative 41% profit margin. That's pretty good, I guess, right? And they have adjusted EBITDA. See, okay, this is a perfect example of why EBITDA is just clownish garbage because it makes you look profitable earlier than you are. Look at the net loss, which is the accrual basis of accounting GAAP. And then look at adjusted EBITDA, where you add back interest, taxes, depreciation, amortization. Oh, looks like their margins are getting better. Their margins are better. See, negative 23% versus negative 30%. You see why these clowns do this? Because negative 23% looks better than negative 30%. Wow. Okay. And then here's a non-GAAP adjusted EPS. Oh, this is so stupid. So in the last 3 months, if you held one share of Fubo TV, Sports Ball Central, you lost 48 cents in the course of 3 months. And this stock is $2.48. So basically, you lost like a pretty significant chunk of the stock price in 3 months in losses, okay? What a freaking piece of trash. Now, let's see. Guidance North America streaming. Well, they're saying that for the full year of 2023, they're going to have $1.2 billion of revenue, and they're going to have 1.5 billion, a million subscribers. So it looks like they're going to grow their subscribers. Well, hold on a minute. Why can't they just combine this together? I like how they break it up. Basically, their biggest, all their revenue comes from North America. I mean, look at this. Massive amount of revenue comes from North America. The rest of the world is like insignificant. It's like 26 million. So basically, what they're saying is the full year's revenue is going to be 1.23 billion. Let's compare that to the prior year. Let's see if we can get that. It doesn't give us it. Okay. It looks like their revenue is they're projecting their revenue to grow by, I don't know, maybe 20, 30% in the next year. They don't really break it out that well. You have to do some calculations yourself. So their revenue is still projected to grow. Okay. Let's go look at the financials real quick. This is what I don't like about this company. Okay. It's stupid. It's a clown stock. Look at the operating loss. $93 million. So they're still losing money hand over fist. Okay, we already covered the profit and loss. Their losses are garbage. They're like negative 30%. Let's go look at their balance sheet. See how sustainable this balance sheet is. So obviously, year over year, cash went down, accounts receivable went up, prepaid sports rights went up, prepaid other current assets went up. So overall, their current assets went up. So they have $436 million of current assets. And they have $438 million of current liabilities. That's interesting. Okay. And a big chunk of that is deferred revenue. So are they going to go out of business anytime soon? I would say no. Okay. At least in the next year. It seems like they have sufficient cash to pay their short-term debts. Let's look at their long-term assets. Property, plant, equipment went down. That's probably depreciation. Restricted cash is up a little bit, whatever. Intangible assets, that went down. Could be amortization. Goodwill is slightly down. They probably had to impair a little bit, but nothing crazy. Actually, wow. Did you know that half of their assets are goodwill? Did you know that? You know what goodwill is? It's paying more than the fair value of a company's net assets when you acquire another company. Did you know that? And you know what happens to companies when they have to impair their goodwill to get a bad acquisition? It gets written down. And you know what that does? That destroys your equity and that destroys your financial statements. That's pretty terrifying to me, that half of this company's assets is goodwill. Let's look at their liabilities, okay? So they have $65 million of deferred revenue, and they have $874 million of total liabilities. So if you looked at this company right off the bat, you'd say, oh, they got $1.2 billion of assets, almost $1.3 billion of assets. And they have $874 million of liabilities. So their balance sheet's like, if you take out this intangible rate, convertible notes, net of discount, issued a decent amount of stock company or not. That's all I'm going to say. Okay. Let's look at cash flows from operations. This is a Joseph Carlson's expertise. Out because he doesn't understand accounting, but that just means I'm a gotcha YouTuber, apparently. Okay. So the first thing I noticed is they burned a ton of cash in operations, $316 million in the last year, right? Yeah, the last year versus $195 million. Okay, $316 million of cash burned. I wonder where they had to get that cash from. On top of that, well, they're not really buying a lot of property, plant, and equipment, to be honest. So they're basically, most of their cash burn, when you look at investing and financing, operating and investing, is just they're burning cash from their operations. $316 million of cash burned. Okay. Let's look at their financing activity. Proceeds from the issuance of common stock. Oh, wow. So basically, they funded all of their cash burn through issuing stock. I wonder what they're going to do in the future, because they're going to keep losing money and burning cash for the foreseeable future. I wonder what they're going to do. What a freaking joke. This is a joke. Who invests in this crap? Oh, Jeremy Lefebvre, the freaking genius. Spencer's fluff buddy. Oh, Jeremy, Strawman's just calling you out because he's a hater. Yeah. Okay. Let's see. You believe Fubo can't go up after earnings because the market is always efficient. That's right. I don't know. Why even look at the company at all, man? Just buy everything. You'll be okay. Well, I guess that's true, theoretically. There's literally no moat. Yeah, I don't get it. I mean, like sports streaming, like you can go to 1,000 different places to get sports streaming. 420 subscribers. Bye. Yeah, the legendary Cole acknowledged me. Congratulations. I love you, strongman, but I still don't understand your fetish with Chinese stocks. Why not European, Latin American, or Australian stocks? Why the obsession with Chinese stocks? Well, I wouldn't say I'm obsessed with them. But I made videos about it. I don't have time this morning. Jeremy gained 40% within a week of his video and is now down 38.6%. Doesn't matter, bro. Doesn't matter. He's a genius. If you criticize him, you're just a toxic YouTuber. The margin of the stock has historically been atrocious. Yeah, they're still atrocious. Negative 30%. I sold all my VT and bet it all on Jake Paul yesterday. I've ruined my financial future. Yeah, just give your money to Jake Paul. I'm sure he'll be a good custodian of your wealth. Let's see. Does stream buffer? Is it just, am I buffering? This buffering is unacceptable, Storm. I'm going to have to dislike and fault for me. Am I buffering? Oh, man. I'm going to lose all my subs. Jeez. All right. Well, I guess the stream didn't go that well this morning, but hopefully it clears up after when the video's rendered, I guess, or whatever. All right. That's it. I got to go to work. Cheers.